Ira Epstein of Linn Associates with your morning flash update for this Wednesday, the 24th of November, 2021. And we're getting on 8:30 a.m. Central Time. Now, I'm not putting out my end of the day updates the way that I did. I have family in from out of town. They're sleeping right now, so I'm able to do this, if you will. They had a late night last night as they're getting ready for Thanksgiving and the potatoes and so on. So please appreciate that. Over the weekend, I will be back to normal, but holiday family comes first. Massive amount of economic data coming out today and has come out, and it's good and it's bad. Market is responding in a negative way. First off, in the MBA mortgage market headline numbers, people are rushing to do, in all categories, more financing. They have become convinced that with Fed members getting so hawkish, saying that they want to move up the timeline of tapering and interest rates, that it's time to make their move. You're seeing that. Then we get a backward number, the third quarter preliminary GDP and chain weight numbers. The preliminary GDP year over year, up 2.1%, a little less than expected. The chain-weighted price index up 5.9%. They expected up 5.7%. Then we get to the PCE and the core PCE. Now, the core PCE is the number the Fed likes to look at, and that's up 4.5%. Consumption up 1.7%, and final sales came out flat. So-so numbers. The monthly durable goods, okay, this came down 0.5%. That's not very good. Then we look at the durable goods ex transportation. They popped right back to the upside. That is real good. And advanced durable goods ex defense, well, that was okay because that's a 0.8%. The prior month was down too. I don't think you put any weight at all into the jobless claims down to 199. Veterans Day skews all that, and you've got to be careful with that. We get new home sales data at 9 o'clock this morning. University of Michigan November consumer sentiment comes out at 9 o'clock as well. Energy analysts at 9:30 are looking for a 20 billion cubic foot withdrawal in the latest reporting period. We're looking at the petroleum stocks coming out, and they are looking here for a small decline in them. And that brings me to the point that if you look at heating oil prices up, you're back up into the 83 area in the crude. Why? The market is petrified that what OPEC is going to do is say, you know, we had 400,000 barrels to cut back. You are releasing X amount of barrels. Maybe we just don't cut in December or January. We'll let you use your strategic reserves. That's the same of us going to have increased production for you. That could fly in the face of what President Biden is doing. The most he can hope to get is a couple of cents, maybe a dime on this move. It's not a smart move. Want a smart move? Open the pipelines. Stop that crazy rule. Let's get the Canadian Sands pipelines going to us. Let's use our neighbors' oil. Stop this nonsense with OPEC. OPEC is not your friend. They don't listen to you in time of need. You're sitting here going green. The world's getting away from coal. China's turning on coal. I mean, I can go crazier and crazier with all this because it makes no sense. This administration's energy policy doesn't work. You're seeing it. We can get away from this by going back to what we used to do in a different way, make it a cleaner way. Getting a little bit of a bid here. La Nina has become a big event that people are talking about in wheat and the Ukraine. The Ukraine's important because with China's buildup of troops on their border, should something develop there, the first thing that would happen is an embargo on Russia by the NATO allies, and what that would do is stop wheat. So you've got to be looking at wheat supplies, and La Nina is not a friend to that. Coffee backing off a little. I was watching a review this morning with one of the analysts from ED&F Man out of London talking about how prices have to go up with the combination of what you've got with labor costs going up, rent costs going up, and of course coffee having gone up rather dramatically. Reason it hasn't happened yet, they're using their supplies trying to get through the holiday season. They're warning, then get ready for the pop. The gold market's still under selling pressure, as is everything. Why? The market's in a pricing phenomena right now. The market has all of a sudden in the past 10 days decided that the tapering's not enough, it's not fast enough, and the markets have to get quicker to interest rate hikes. If that isn't the case, there'll be a problem. But the dollar, you're near 97 on that index. Look at all the currencies getting smashed because of that. Dollar reigns supreme. And if you think that the world economies aren't doing well, Dr. Copper, up another 5 cents, pushing $4.50 a pound. When it was in the 420s, I was telling you the pros were covering shorts right here in these videos as you got to the lower Bollinger Band. Do I know? I don't know, but that's what, as a chartist, I would assume they were doing, and I think looking back, that was what they did. Now, I put out a special gold report that comes off our website today. Look at the longer term part of it, the weekly charts. That's the one, if I were you, I'd focus in on to see where the market has fallen to, where you're at right now, and does this make any sense? I did not include the seasonal charts or the price counts this time. Instead, I put GLD and GDX for those of you that watch those particular ETFs. How do you view it? Just go to our website, under the word research on the top, give it a click. You'll be able to see it. Next week, I'm going to do another report, not in the metal. I'll surprise you, but I'll tell you what it is when it comes out. I'm Ira Epstein. You all have a great day, and I will talk to you. I'll talk to you tomorrow. It's actually going to be not Thursday, but it'll be Friday morning on this next update here. And don't look for evening updates tonight. Take care.